Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Welcome to the Pro Farmer Podcast, everybody. Davis Michaelson here with you on December 1st, 2025. We're off to a new month, a new week here, and Spencer Langford joins us now. Dude, not much going on around the Pro Farmer offices on Friday. I'll be honest, I was checked out in a food coma on Friday. I trust you were as well, buddy. But we had some gains in the corn market on Friday, and really, I don't know how much stock we put in these numbers. Trade was probably fairly light, I would imagine. But still, I mean, we'll take 2.5 cents in March corn up to 447 3/4, eh?
Yeah, definitely. Davis, I spent just as much time looking at turkey last week as I did some of these corn and soybean contracts.
Good.
Corn, definitely. We saw a little bit of bullish news come out for corn. Ethanol production that was strong. The most recent report we saw week ending November 21st, 1.13 million barrels per day of production. That was up slightly from the previous week. So ethanol continues to remain strong. We also got some news on Friday of a flash sale to an unknown destination of 273,000 metric tons. That's always a nice little boost. We saw that kind of help add to the buying spree, or not so much a spree, but add a little bit more to the upside there on Friday as well. I think the next thing people are really going to be focusing on is what's happening in this Brazilian crop. I know, right, we get reports from Dr. Cordonnier. He does a great job with that. He left his estimate unchanged last week. We've got forecasts of pretty good rains coming into Brazil here this week. So I think it'll be interesting to see if that yield increases any from where he's got it set right now.
That unknown flash sale, is that expected? I mean, do we suspect that's China? That's kind of usually my assumption. When I see unknown, I sort of feel like that's a wink and a nod. It's totally not China, but it's unknown. You know what I mean?
Yeah, normally I do think that those, that's kind of their tactic under normal circumstances. However, here lately, I think that they've been trying to show that they're eager to get involved in the U.S. grain market as a show of good faith in these trade negotiations. So where it ends up, we'll see. But they've done similar things with wheat purchases up here over the last month or two, of just to kind of show that they're committed to this trade deal.
Yeah, that's a great thought. The January soybeans were up 6 1/4 on Friday to 1137 3/4. That's a weekly gain of almost 13 cents in that January contract there. Do you like the direction we're heading in soybeans?
Yeah, so last week, soybeans, we saw them moving in the right direction. However, it was a shortened trade week and a lot lower volume than we're used to seeing. So I'm not sure how much that's truly shifted market sentiment in a meaningful way. However, some news that we did receive was the phone call between Trump and the Chinese president, where we didn't get a whole lot of details, but we did see that there was a generally productive conversation and that he had committed to purchasing an additional 10 cargoes of U.S. soybeans.
Well, I like the sound of that. Now that we're still trying to play catch up with this export sales data for the weekend at October 16, I make it here. Net export soybean sales were for the current marketing year 1.108 million metric tons. So we're seeing some of this back data start to fill in here. Is that giving traders a little bit more confidence toward the upside in soybeans?
Yeah, I would say so. I think it's limited just with the data, still coming from October. So we're
Right.
kind of, like you said, playing catch up. It's fresh news, but it's, maybe a reheated leftover, right, of news, which is maybe fitting for this week. But
Indeed.
yeah, I think it's positive, but I also think it's going to take some time for us to start to see those soybeans show up in the export inspections reports. Right, we know that China has a lot of soybeans in their domestic stocks. They've already purchased quite a bit from Brazil for the December and January timeframe there. So it's going to take some time for those to really start to show up and get on a boat to leave the country.
Yeah. Yeah. All right, take us over to the wheat market here. I would call it a lackluster performance just in general last week, but at the risk of sounding negative on wheat, that's just sort of what wheat does sometimes, isn't it?
Yeah, out of all the commodities that I took a look at last week, wheat was definitely the most sideways, the most where there wasn't really a ton going on. I do think one thing to keep in mind is we've seen progress being made, or coming back around on these peace talks in the Black Sea region.
Mm.
So generally, right, if we see peace return to the Black Sea, we know that that's going to increase exports out of the region as things become more stable. However, even if we don't see that conflict get resolved, I think that Ukraine is going to try and export as much wheat as they can to help, right, fund their economy, rebuild their army, just anything they can to get money coming in to fund that war effort.
Yeah. Yeah. Okay. Let's hop over to the livestocks here. The rodeo in cattle continues here, and if you thought cattle was just headed solidly lower in perpetuity, um, here we go. On Friday, February cattle up $4.55 to 215.57 and a half. That's up $3 for the week. January feeder cattle up $8.85 on Friday, 323.97 and a half. That's a weekly rise of almost $10. The cattle just don't want to give up the ghost.
Yeah, very, very early in the week there, I was pretty nervous. We saw a limit down day. Uh, I think that just the psychological mood in the cattle markets was very, very bearish. We saw the plant close in Lexington. Obviously, that is going to, severely limit the amount of cattle that can be run through the supply chain. Right. That I think it was roughly 5% of the total U.S. Slaughter capacity for cattle that plant handles. So, right, that limits what they're able to get through. That limits the amount of cattle that are going to be purchased, right, to fill the slaughter capacity, and in turn, that's likely going to cause some sort of decrease in the price of your cattle. However, I still think that these tight supplies fundamentally they have to provide some sort of floor, right? That's what we're in the process of trying to figure out of where exactly is that at. Obviously, speculation in the cattle markets over the last year and a half drove those values really, really high. We're hitting records like every other day. Um, so I think that's what we're in is price discovery of where's this floor at. One thing that I will point out to in the cash markets that I thought was a good sign of maybe hitting a floor was early in the week last week we saw cash trade dip as low as $207 for steers in the just across the 5 market average. However, later in the week, by Friday, we saw prices mainly in the South, they rebounded up to that 220 mark. So that's telling me, hey, cash negotiations maybe we're holding off a little bit here in terms of hitting a nearby floor.
Yeah, that's a significant rebound, and I mean the cash market doesn't lie. That's an interesting development there in the cash cattle market. Feb lean hogs down almost 40 cents at $81 on Friday, but on the week all told up $3.30. Some support on Wednesday here. Are we bargain hunting here in the lean hogs?
Hogs, I feel like I haven't really had a ton of news or recent developments to share with on that. I think the main story in hogs is that seasonal weakening is continuing, maybe a little longer than we would normally expect it to. However, until we start to see a reversal in the cash market, I don't think there's much to change. Right, the lean hog index it continues to decline. It's gone down every day since I believe September 24th, 23rd, around there, and there's no seeming end in sight. They haven't received much support from the cattle market like they have for most of earlier this year, and until cash prices start to trade at a discount, I just don't see a lot of posturing changes in the market.
Okay, very good. Well, as I said at the beginning, we flipped to a new month. We've got a fresh week starting out here. Thanksgiving is in the rearview mirror here. Talk to me about what's coming up this week. Are there a couple of highlights that you're looking forward to this week? What have we got to look forward to, Spencer?
Yeah, NASS is publishing their monthly slaughter report. They haven't put one of those out since September, so I usually like to look at that data. I know we get daily reports from AMS, but the way that NASS presents the data, it's a little easier to look at longer term trends for things like carcass size, right? How what's the weight of these animals as they're going into the plants, and what are we getting out of it? I think that's always a really interesting long term trend to look at. And we're also getting an update from the Australian government on their crop outlook. So that'll be a big player for the wheat and cotton markets there.
Outstanding. Well, Spencer Langford, I'll cut you loose here with this. Thanks for tuning into the Pro Farmer Podcast, everybody. I've got Bill Watts on the other side of this break. We're going to talk acreage right here on the Pro Farmer Podcast.
Hey everyone, Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to Pro Farmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more.
Get the latest markets, weather, and rural news whenever it works for you. Farm Journal TV is on Roku, Fire TV, and mobile. Try it for free for 14 days and take ag with you everywhere.
Welcome back to the Pro Farmer Podcast, everyone. Glad you're here along with us. Joining me now, Bill Watts, editor of Pro Farmer. Bill, we're through harvest for the most part. I would say, given the snow over the weekend, harvest is probably shut down in the Midwest, and it's already time to start thinking about 2026. Acreage decisions are becoming part of the decision-making process here. We've got the Ag Economist Monthly Barometer here out, and there's some interesting findings here in the acreage projections. Can you talk to us about it, please? Let's just start with a nice broad overview, Bill.
Yeah, well, it was an interesting survey. We do take a look at planning expectations from agricultural economists, and as one would expect, we do see economists looking for corn acres to come down after we had a nearly 90-year high in planted acreage last year. So, about 40% of them look for us to stay above 95 million, but another 40% in that 93 to 95 million acre area. We were at 98.7 million last year, when we got that shocker. I think was that in September, with the report where all those acres were added. So of course, soybeans coming back. We were at 81.1 million this year, and 53%, see us at 82 to 84 million, 40% at 84 to 86 million, and about 7% at 86 million plus. So, it does seem like the wind's moving in that direction in favor of soybeans. It is interesting. You look at the ratio. The last I looked, if I did my math correctly, the November soybean December corn ratio was right around 2.4, which is that threshold that does tend to favor soybeans. And then of course you have the fertilizer costs and everything else that are higher this year, and it probably skews that somewhat more in soybeans' favor. And then of course just the rotation alone, you would expect to be pulling those acres back, with such a high corn number from last year.
Farmers love to plant corn, though, don't they, Bill? I mean, high inputs be danged. It just seems like there's a preference for corn there, and yet soybeans do absolutely seem to be making some ground here. I wonder if there are, for about 2 years, we've been expecting demand for soybean oil here domestically as far as biofuels goes to really kind of light a fire under soybean acreage here. Are there any rumblings of that at all here? Are you hearing anything as farmers leaning in, maybe hoping to get some of that biodiesel demand for soybeans to give them a little kickstart on demand?
Well, you have to wonder if that's a factor. I mean, it does seem plausible. And you look at what's been going on with the basis, right? It does seem that, basis around biofuel facilities and, has been boosted, as a result of that. So that may be part of the incentive as well. So I think, that outlook, may have, something to do, with the expectations. So, of course, what happens, in terms of biofuel policy here is also potentially an important factor to watch as we gauge where we're going to end up with acres next year.
Yeah. I would bring up earlier this month, S&P Global put 2026 corn acres from their own separate survey around 95 million, soybean acres at 84.5, wheat acreage projected at 44 million acres, and that's on their own survey of farmers and agribusinesses. We've also found in the Ag Economist Monthly Barometer a decline in expected wheat acreage there. Nobody wants to plant poverty grass anymore, Bill?
Yeah, that is the term, isn't it? It does. Our survey found, 43% there, the 44 to 45 million, 36% see under 44 million acres. So we does feel like it's going to take a bit of a hit here, and it's the the economics just don't seem favorable. And of course, we are. I think as you mentioned with Spencer, we are looking at big crops, around the world. Southern Hemisphere crops seem, really strong, and I think over the weekend we saw, some good, optimistic numbers from the European Union as well, and things like that. So, it seems like there's a lot of wheat out there. So it'll be interesting to see what happens with spring wheat plantings. The demand for high protein wheat has been pretty strong, but again, a lot of wheat out there. So, may continue to kind of constrain things even in that area.
Well, and we don't talk a ton of cotton here, but I do remember, if I'm remembering correctly, it was about a year ago when there were projections floated around of somewhere around 11 million acres of cotton in some of the earlier estimates. And now this year, this survey at least is finding cotton acres to fall down around to that 9 million acres mark. Does that seem to make sense to you?
Yeah, well, we're at we were at 9.3 million last year, and we saw about 1 in 4 of the economists think we could fall below 9 million, and we haven't seen that since 2015. Back then, we saw prices get down to 61, nearly 61 cents. USDA is projecting 64 for a farm price going forward here. So I mean it's kind of ugly out there. So it's not a surprise.
Okay, let's make it practical here, Bill. Based on these findings here, and maybe the answer is nothing, but in your mind, is there something that farmers need to be doing? Our corn and soybean farmers, wheat farmers, cotton farmers, is there something actionable in here as far as getting started on marketings for the 26th season? Or do we need to hold here and wait till we get a little bit more information in on what's ahead of us?
I think we want to see what happens here. I think we're kind of, early in that window around the decision-making process. It's going to be interesting to see what happens in terms of the China demand for U.S. soybeans and what expectations are around biofuels and everything else. But I think, keeping an eye on that corn soybean ratio will be important here going forward. I think there's that question of, do we see, if we do see China follow through? Do we see,
Right.
continued gains in soybeans? Does that, push that ratio further or not? Because we have also seen strong demand for corn. So, I think people are going to be paying attention to that. And, I think, down the road here, we're going to try to, make some assessments about what that means as we get into 2026.
Well, and even as Spencer and I were talking about, there are some data sets, some key data sets that we've been without because of that government shutdown that are still playing some catch up here. So I think you're right. It's difficult to get a total picture of exactly where we sit, especially on the export side and the demand side. Bill, let's call her good there. I guess, the big thing, stay tuned to Pro Farmer. Shameless plug here. Pro Farmer is going to keep us updated on all of this as we're going along. Fair statement, Bill?
Absolutely. We're going to be on top of that and digging into these things and figuring out what they mean going forward.
Very good. Well, thank you, Bill. That was Bill Watts, editor of Pro Farmer. Welcome to December, everybody. I'm your host, Davis Michelson, here with the Pro Farmer Podcast. Thanks to Spencer Langford, of course, Bill Watts, and production support provided by Zach Zingula. We'll be right back here next week with another Pro Farmer Podcast.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on ProFarmer.com and in this Friday's Pro Farmer newsletter.